Today, the topics of discussion that we're going to cover is to introduce you to some of the basics so you can have a better understanding of how we generate profits in the financial markets, and also, to maximize the trade alerts while you're learning how to become profitable and grasping a few of the terms. And also, this for me is the biggest thing here, removing you out of the equation as quickly as possible. So a few little bits of housekeeping before we go in it. First things first, if you're not here with a notepad and pen right now, grab one, because most of you will forget what I'm about to talk about anyway. But first things first, remove your emotions. Trading is one of the most emotional games when it comes to this industry, because you're going to have your emotional battles around money and everything like that. So do not trade with more than you can afford to lose. You can lose everything in the financial markets. You can lose it in trading. Obviously, we have our parameters and everything there, and you are fully in control of your own money. Everything and anything that we say is not financial advice, and past profits do not guarantee future results. However, the results that we're getting are pretty incredible. So getting started, when you're setting up your broker, here are a few settings that you'll need to follow. If you don't, you won't be allowed to use the copier side of things. So when you're getting set up, we want you to use a standard account, MetaTrader 4, MetaTrader 4, MetaTrader 4, MetaTrader 4. The reason that I've put that in there 4 or 5 times is you would be astounded the amount of people who haven't followed the PDF that I created. So I want to put MT4, MetaTrader 4 in there at least 4 times so that you remember it is MetaTrader 4. And then obviously your currency, and it looks a little bit like this on the right-hand side. So that's the getting started part of it. The first thing you're going to do, if you're not already involved, you're not already trading, we're going to get you to set up MetaTrader 4. So this is going to be the app where you're going to place your trades through that we send in from the Telegram group. We then link you into Vantage, which is the broker. So once you've received a link from whoever referred you, you're then going to set up your Vantage. This for us is a broker that we've been with for, I think it's actually 7 years now. So once you're on here, you'll then take the steps that we give you in the PDF to go through and create everything nice and step by step. Once you've done that, you will receive an email from Vantage with your details on there that give you the account number, the password, and more importantly, the server. It'll look a little bit like this on the right-hand side. It'll say Dear, and then obviously the details, MetaTrader 4 login, your password, and your MT4 server. You must use these to log into MetaTrader 4, and don't be lazy with this. Don't copy and paste because it doesn't work. It'll give you an error message, and you want to just type these in nice and manually. So once you've got MetaTrader 4 set up, what you're going to do is you're going to click on the settings on the bottom right-hand corner. Once you've done that, you're going to then click on at the top where it says new account. This will then give you the option then to open up a demo account or log in to an existing account. You're going to click on log in to an existing account. Once you're on here, you're going to find your server. So this, going back to the previous slide where we got your email, you will get the account number, the password, and also the server on there. You're going to type in at the top where it says enter company or server, you're going to type in the server and make sure it's the exact one. Then once you've done this, it'll bring you over to the login and the password with the option then to click on save password. Once you've done this bit here, you click on the top right-hand corner, and again, you click on sign in. Remember, do not copy and paste. Once you've done this, this is what your MetaTrader 4 will look like. We're going to show you now how to set up the currency pairs, because there can be a lot of noise here. So on the bottom left-hand corner down here, you'll see it'll say quotes. What we want to do is make sure, first of all, you're on here, and then tab it to advanced. For me personally, I like seeing the lows and the highs. I like seeing the information on here. But what we're going to do first of all, because we don't trade all of these currency pairs, we're going to get you to delete your currency pairs. So in the top left-hand corner, you'll see a little edit button. Then you're going to tick all of the currencies, and then you're going to click on delete. The pairs that we typically follow are gold, which is XAU USD, Euro USD, pound against the US dollar, pound against the New Zealand dollar, USD JPY, and Euro NZD. These are the pairs that we trade. So the main one, I'd say 95% of it, as you've seen if you're already in the Telegram group, is gold. So what we're going to do is we're going to get you to now add your currency pairs. So in the top right-hand corner, you're going to see this little plus button here. Yes, my battery on this was stinkingly low, as you can see on that print screen too. But we're going to get you to click on the plus icon. Once you're on here, you're going to see Forex Miner STP, and you're also going to see gold. we're going to get you to click into these sections here, and you're going to find the currency pairs that we mentioned on this slide here. Obviously, if we send them out in the group and it's a little bit different, you just click on the plus, you click into Forex Miner STP, and the list will look like this. All you have to do on these is click the little green button and it will add them to your quote section. So next, what we're going to do, now you've got everything set up, the pairs that you're going to trade, we're going to show you how to navigate to the chart. So you, at the moment, you might not need to use any of this. You might just be copying and pasting the trades, but I want to show you how to get full use out of the app so you have it there visually. So there's two ways to get to the chart. You can click at the bottom here where it says chart, or you can click on the currency pair and then click on chart itself. Once you've done that, it'll take you through to this. In the top left-hand corner here, you'll see it'll say H1. On H1, all this means is the different time frames. So you're going to see M1, which is 1 minute, M5, 5 minutes, M15 is 15 minutes. What that means is that each candle that you see here, each one of them will represent that time frame. So if we had 1 day selected, which is D1, all you would see here is that every single one of these would represent 1 day. All we're going to do as we go through this is we're going to show you how to make sure that your stop loss, your entry point, and your take profit is showing on the chart. So for me, I love to have the visual side of it. Again, click on the settings in the bottom right-hand corner, then click into chart section here. And then where it says trade levels, you can tab this on. What that will allow you to do is whenever you enter a buy or a sell position, which I'll talk about in a second, it will show you your entry point, your stop loss, and your take profit. So when you see in the Telegram, it says move your stop loss to above entry. You don't then have to go in and click on quotes and find the pair and see where you entered. You can click on chart real quick and then go over to your trade section and adjust it. So what we're going to do now is we're going to talk about a little bit of the terminology, because for those of you who are in here, you're going to see some words getting bandied around and you're going to get a little bit confused. I was at the beginning when I first got started, but these are the most common. So SL means stop loss. What this means is that if the trade goes the wrong way, the stop loss is there to preserve your capital. Rather than just letting it run and run and run and eventually blow your account, that's what the stop loss is there and designed to do. We have ours set so that we don't go in drawdown more than 5% or more than 8% on the copier. This is just to give us a little bit of a, a swing around to get you guys to a point where we can be profitable. The TP is also known as take profit. Again, it does the opposite of the stop loss. This is where we're going to automatically take you out of the trade once this section is hit because you've hit the profit level. Again, you can adjust this top take profit to take profit 2 or take profit 3 once you're getting a little bit more advanced. But again, this is just more for a basic understanding right now. You've then got short, which is known as like a sell or a down, because we can make money in the financial markets when we're going up and when we're going down. So for me, the biggest thing here is understanding that when the market is going up and when the market is going down, we can monetize both ways. We've then got two terms here, which I love. You've got the bearish and the bullish. The way that I love to remember this is bears attack downwards. That's a downtrending market. And bulls attack upwards with their horns, obviously. So that's an uptrending market. So if you ever hear or you see on social media that we're in a bearish market, or you hear in the Telegram it's very bullish, that's what that means. Lots is the amount you will risk per pip, and a pip is the percentage in point. What this basically means, and I'll share this with a little bit in a bit further on, is just how much money you're going to make as each market moves. Layering is adding extra positions. You'll hear Curran and James talking about that a lot, where they can say you can layer your positions. What this basically means, and this will get covered, a little bit more in depth on tonight's call, is as the market starts to come, let's say we're aiming up here, just where my cursor is, but the market's coming down, we can layer our positions as the market comes down and add more positions to move up. Again, we will cover this in a bit more in depth. Drawdown is a declining fund. So when you hear a market is in drawdown, it typically means that, let's say you started with £1,000, you might be £10, £15 in drawdown. So next, as we go into the next bit, we're going to teach you about understanding lot sizes and pip relationships. So pips, they change in price on every currency pair. they're identified as the big number on MetaTrader 4. So you can see here, the big number is what is the pip. You can see on the right-hand side here, 46, 43, 25. So the lot sizes determine how much money you're going to gain or lose with every change in the currency price. For us, this is something that I would love you guys to learn, pay attention to, write this down. But gold, Japanese yen, CAD, CHF, USD, they have different points on the market where they're basically showing different things. So if you see here, gold has 1.1. That's the pip. USD JPY has 59 as the pip. So it's not something specific for each currency pair. Gold has its own way of doing it, which again, the 1.1. GBP JPY is always the 2 after the decimal point. These little numbers here, ignore. They're what we call pipettes. They don't adjust or kind of take into consideration for anything. So if you see this here, 0.2, if it went to 1.2, that'd be 10 pips. But again, I'll show you that in a bit more detail. And Euro USD is the 4th one after the decimal point. So again, if it went from 15 to 16, that'd be 1 pip. So if we were looking at this here, so this is XAU USD, also known as gold. The focal point here is the 1.1. So if this was to go from 1.1 and we were to add 10 pips, we would go from 2432.1. That'd be 10 pips. And again, if we go the opposite way, we'd just take 10 off of that because that's the one, if you will. So if it went from if this went from 1 to 2, that'd be 1 pip. If it went from 1 to 5, that would be 4 pips. So you'll get used to this the more that you see it. USD JPY, exactly the same, 0.2. If we were to add 10 pips, that'd go to 12. And if we were to take it off the 0.2, we would knock it down. And this here for Euro USD, exactly the same. So I'll do it on here so you can see visually what it would be if we were to put on 40 pips either side. So if we were to take 0.2, and again, if you've got a notepad and pen right now, I would highly recommend writing this down. So as you go through, if we were to add 40 pips to this, what would that go to? If we were to take 40 pips off this, what would it do? These are the exacts here. It would go from 187.02 to 42, and then we'd take 40 off of this, and it'd end up at 186.62. The same with Euro USD. We would add 40 pips onto the 1.5. It'd take it to 5.5. If we were to take it the other way, it'd take it to 7.5. Just do me a favor. Drop me a 1 in the chat if this is making sense right now. Again, I'm not expecting you to understand this straight away, but you might see sometimes it says we're 50 pips in profit, we're 100 pips in profit, and you guys might not know exactly how, to make it work. So where you see XAU USD, this is the one that you really need to understand because we trade this probably 95% of the time. So if this was to move 40 pips upwards, because we're in a buy market right now on gold, that's what we've been doing, we would see here that it go to 51. So 5.1, that would be 40 points. If this went from 2431 to 2445, that would be 140 pips, right? So you guys can see when you're trading gold, like this thing can do 700, 800, 900 pips in one day. So you guys need to be understanding what it is that we're doing right now, because if the markets can move like this and you understand this and you understand what Curran's talking about with, the levels and the zones and the terminology, trust me, you guys are going to make an absolute killing in this game. So the next bit that we're going to look for is lot sizes. I've seen some of you doing an absolute madness. I've seen some of you with £400 in your account. And in fact, before we go into this, I'm going to go back. If you're on this call right now and you're currently trading, I want you to tell me this again. This only comes to me, right? This only comes directly to me. I want you to put in the chat what your current account balance is and what you're currently trading per lot. Because I've seen some of you with a £500 account trading 2 standard lots, 3 standard lots, and you guys are fucking crazy. So before we go into it, this is what it looks like on here. So there's different levels of lot sizes. We've got the micro, which is 0.01 to 0.09. So this isn't 1 pence and 9 pence. This is 10 pence to 90 pence. So 0.01, each move would be 10 pips. So if we were to, 10 pence, sorry. So if we go back to this previous slide here, on this scenario, you would have made £4. If you'd have done it at 0.10, you'd have made £40. If you'd have done it at this, at one standard lot, you'd have made £400. So again, seeing the lot sizes here and understanding the correlation to your account size is key. So when we go into it, remember that the bigger the lot size, the bigger the reward, but also the bigger the risk. So again, I'm just going to leave this here for 2 seconds. If you want to print screen it and you want to understand this, if you're new, like, again, this is something that I went through when I first got started. I understood, what it is that we were doing, how it worked. And for me, I like putting in little bits of practice. So you can sit while we're doing this, while you're listening to me, and you can just practice yourself. You might get it wrong, no worries, but we're all here to learn together. So 0.03, 30 pence, and so on and so on, £12.50, it looks like here, but that's actually £125 per pip, right? It goes all the way up. You've got banks, governments, hedge funds trading, with probably 10, 20x that. So as we go through, understanding risk management. So 95% of people that I see don't have risk management. They just chuck a trade on, hope it works. They have no understanding as to what it is that they're doing. So how I work it out for me, account size, divide by 100, times equal is obviously 1% there, right? So if we're doing that, we're risking 1%. An example of this, if you had a £1,950 account, 1% would be £19.50. So to work out the lot sizes here, you do the amount at risk divided by the amount of pips at stop loss. So let's say, for example, here, let's say the stop loss was 20 pips. You would do £19.50 divide by 20, which is 0.97. So you could either do this at 0.09 lot sizes or 0.1. And remember, risk management rule, never risk more than 3% of your account per trade. Some people say 1%, some people say 2%. I'm a realist. I know that some of you guys aren't going to listen to me anyway, and you're going to put whatever you want on. But for me, 3% per trade. If you risk more, make sure you're completely aware of what can be gained or lost in that trade and accept the outcome. Because the biggest thing for me that I see within trading is a lot of you, how do I word this properly? A lot of you will cut your profits short and you'll take 1, 2, 3, 4, £5, but you'll let your stop loss go into 20, 30, 40, £50. It's backwards. Some of you would rather not cut the trade short and preserve your capital, but you'll cut the profit short. And then you'll get pissed off with yourselves. And again, drop a 1 in the chat if this has happened to you. If you've cut a trade short and it's ended up running for 100, 200, 300, 400, 500, 600, 700 pips, and you're sat there feeling like a dickhead, right? Because you could have held it, you've sat there and you've been worried about, oh my God, what if it comes back down and hits stop loss? But then when it goes the other way, you'll adjust your stop loss. You'll take your stop loss off. You probably didn't with a trade with a stop loss anyway, right? And you're now sat in a position where you're not making as much money from the trades that we're sending out, but you're adjusting your stop loss and you're ruining your account as you go along. So when we go into this, to keep it simple, we recommend that for every £100 in your account, you use 0.01. So if you've got 1,000 in there, it should be 0.1. Again, this is just a rough guide to make it quicker for you when you're entering trades. If you're using the auto, we recommend 0.01 for every 500. Again, a risk management rule, never use more than 3% of your account per trade. Most of you will not listen, and it's okay. So the next bit we're going to go through is entry types and pending orders. Again, you can print screen this if you wish, take a screenshot of it, but we've got 4 different entry types, and we've also got instant or market execution or sell or buy. So we've got buy stop, sell stop, buy limit, and sell limit. A buy stop is an order placed above entry price, and we're expecting the price to go up, bring us into the market, and continue to go. We've then got a sell stop, which is the opposite way around. We're expecting the market to go down, bring us into the market, and continue to go down. Buy limit is expecting it to go down to come up. and a sell limit is we're expecting it to go up to come down. Typically, I would say that the vast majority of the trades that we send out, they're market execution, they're instant execution, so you won't need to worry too much about that. But from a visual perspective, this is what it'll look like. In a buy stop, when price is rising, it reaches a certain point, enters into the market. So let's say we're down here, we're expecting it to break this high, price goes up, tags us into the market, and we have take profit up here. Done. The opposite way around, we've got the sell stop coming down, tricks us into the market, boom, we're down. We've then got a sell limit, which is we're expecting the market to come up, trigger us into here to continue to go down. Opposite way around is the buy limit. We're expecting the market to come down, enter us into the market, and go back up. So they're the 4 different types of pending orders. If it does not say the following, buy limit, sell limit, buy stop, or sell stop, like it does on the right-hand side here, you just click where it says market execution, and it gives you all the different options. It's a market execution. We do buy and sell. We're not necessarily going to type out market execution because it takes too long. But if we say buy or sell, you just click buy or sell. So then when it comes to entering trades correctly, this might be a trade idea just that we send out. For an example, the currency pair is XAU USD. So at the top, whenever you're on the trade section, it needs to say XAU USD. The next option that we're going to say in there is whether it's going to be a buy or a sell. In this option here, it's a buy. So when you've typed in the stop loss and the take profit and it's at entry, you will then click buy. So we're then going to make sure it's around the 2431 area, just as an example. So you'd see on the right-hand side here, you'd see the left-hand number is what we're going to be looking for, or the right-hand side if we're going for an opposite way around. But then we're going to put stop loss in. The stop loss section is where you're going to type it in. Once you press on this section here, it will auto-generate a number. You need to make sure that you delete that out and type in 2427. This is 40 pips. So if we were using this at £1 per point, a 0.1, you had £1,000 in your account. Worst case scenario, you're going to lose £40. But for a take profit, we put that in the bottom section again, 2438.5. If this goes the right way, we're going to make £70.50, right? So as we understand this, we don't want you to become a professional depositor. We want you to get to a point with this where we're conditioning good behavior. For me, mindset, psychology, and conditioning ourselves is what will differentiate you from being a professional depositor and someone like myself, James, Curran, who are withdrawing from the market every single week. So when you make a good amount of profit, let's say you've got a £500 account and you make 50 quid, £75, right? Profit that week. Don't be sitting there thinking, oh my God, what if it could have been 200? What if it could have been £20 more? Like, take that out. Just withdraw it for the first time. Withdraw it for the first time. Treat your family. Treat yourself to a bottle of wine if you're a little lush, right? If you've made enough money to buy yourself them trainers that you've always wanted, go get them. The shoes, the night out, whatever it is. This will train your brain not to over leverage and more importantly, not to gamble. So if we look at long-term compound growth, if you're thinking short-term, you will 100% lose in this market. There's a link here that I can send you all. This section was based off of a £500 deposit with aiming for 3% per week, depositing £100 per month alongside, right? So overall, you'd have ended up putting £1,700 in, but can you wait a year and have 6,500? Again, we cannot guarantee income with this, but what I can show you is the week so far that we've just had. Last week, we did 1,095 pips. So if you'd have traded at 0.01, which is 10 pence, you'd have made £109.5, give or take. 0.1, you'd have made 1,095. 1.00, you'd have been 10 grand, 20 grand, 50 grand. If you caught every trade based on 0.01 in retrospect to your account at £109 on a £500 account, that would have been 21.92% growth. Obviously, that's if we took every trade, we got in at the exact points that we did on the manual, right? So for us, this is why the manual trading chat is so important, because you guys can be double dipping. You can have the auto running without you worrying, without you stressing. And then you can be learning as you go along using this. We did 1,095 pips. That's insane. For a group that costs you nothing, there's no monthly fee, there's no initial setup cost, there's nothing like that. And we're also getting to a point now with this where we want you guys to learn and listen. So again, go over to YouTube, type in Trading in the Zone by Mark Douglas. If you struggle to find it, it'll be on my YouTube. Find it. Start listening to this stuff. Start learning. Start immersing yourself into it. Stop listening to fucking rap and whatever it is you listen to. And if you listen to 2000s R&B, that's okay. But again, let's start conditioning ourselves to win. The first 15 minutes of this book, it will hit you like a sledgehammer. It will tell you exactly why you're gambling, exactly why you're over leveraging, and exactly why you're in the position you are now where you're not getting the results that you want. So for me, this is well worth a listen. If you want to buy it on Amazon, I think it's 35 quid. So this is where we keep our eye on daily news. So this is where we can see the currencies. So we can see here on Friday, we had some red folder news, employment change, unemployment rate, everything like that. So when you see here, this is called Forex Factory. So again, if you want to check this stuff out right now, you're not probably going to need to know any of this bit here, but it's more just so that you can see and kind of understand what it is that we're doing, what it is that we're talking about to help you guys learn as you're going along. The things to consider when trading, for us, you hear us talk about it all the time. We don't typically trade, after 5, 6 p.m. And that is because we start to go into a different session. The end of the New York session's happening. We're going into Asian session. It's not really where we want to trade. So there's 3 different trading sessions. You've got London, which is 8 a.m. to 5 p.m. New York, which is 1 p.m. to 10 p.m. Asian session is 12 a.m. to 9 a.m. So the best time to look for opportunities to trade will be during the London Open, typically, the New York Open, or the perfect overlap between 12 and 4 p.m. And that's why you'll see a lot of our trades come out during that time. But so remember with this, more volume plus more opportunity to catch pips equals more money in your bank, but there's also the potential chance there for risk. We've got a school community incoming, which will show you everything, the basics around Forex, understanding pips, risk management. The calls will be recorded. They'll be put into there so that you guys who want to learn this, who want to grow, who want to get around a community, we've got that there as well. And from the other side of things there, remember that you're always a student to this game. Even though myself, James, and Curran, we've been doing this for years and years and years, we still get losses. We still lose. We still get to a point where, we have shit days sometimes, right? We can't win 99.999% of the time. Some of these people out here who are showing you 100% success rate, that they've got this success rate, they never lose a trade, they're bullshitting. We're real traders, we're in the real market, and it's going to be tough at the start. You're going to get frustrated a little bit by the process. You're going to get to a point with this where you want to give in, you want to quit. But the biggest thing that I always say in this game is you cannot go broke taking profits, right? So if you're looking at your trading account right now, and let's say the trade could hit £50 profit, but you're at £41.62, take it. Don't wait for it to go to £20 and then you start panicking and worrying. You cannot go broke taking profits.